Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Today, August 12th, we do see at 8:30 a.m. we have some PPI report with the U.S. dollar, so be aware of that. And so there'll be expect some maybe some volatility around 8:30 time today. I'll try and mark some vertical lines on the charts, so if I don't forget, so that we don't forget that those reports are coming out. Other than that, it's going to be fairly quiet till about 1 o'clock. There'll be a bond action report here with the U.S. dollar, but that's the main one here is at 8:30. And tomorrow looks like it's going to be fairly easy day tomorrow. There's a little orange folder here at 10 o'clock, but usually those don't have quite the impact that the red folder news ones do. So then let's go to our Hercules to see what's hot and what's not. Right now I'm looking at the U.S. dollar strong and the British pound weak. And we have that on the 1 hour, the 30-minute, the 15, and it has a little bit of a pullback on the 5-minute, but right now I'm going to be looking at the U.S. and British pair. Pull the chart up, and I drew this thing out a little bit. We see it right here, right around the 5 o'clock time frame here. I'm on a 5-minute chart right now, and these are my zones. I've got my two 15-minute lines that I have here, and then I break those down into thirds, which with this heavier dashed red line and green line. Right now we're in the bottom third, and we're just about ready to bounce off of this lower 15. Now, once we get a 5-minute close below this 15-minute blue line, if we get 5-minute close below, then we can take the trade short with a pullback if the Hercules is saying that we still have the dollar strength. And say this is right now coming down. If you're already in this trade, basically I could have gotten into this trade here if I were up at 5:40 in the morning, but I was not. So actually with this trade, with this close, this 5-minute close below this green line, I was able to take it when it came back to the green dash line and pretty much anywhere along this upper trend line that we have right here. Here's the anchor, here's our hit. And right, so you can see right in here where it broke through the bottom of the 15, this 5-minute green line, came back, retested our wedge, and then we gave us a chance to go short to the next two targets. And there's actually just about ready to hit. It would be a third target if you were trying to go for the longer run. Most of these points are 7 pips apart on the British. Anytime you're on like a U.S. pair other than the U.S. yen, most of these areas are 7 pips apart. And this gives us our 21 pip zone between the heavy blue line and the dash green line. Same way with the red and green. These are all 21 pips. And then we break those in. I'll break this one into thirds. Once we get up here, I'll move these lines and break this one up into thirds for the same situation where you're breaking it into 7 pip segments, trying to get that 7 pips on the way in between as it's trending in between these areas. Hopefully that's
Excuse me, can you remove the clouds?
Can I remove the clouds? Yes.
Thank you.
Is that confusing?
Yeah, it's like clearer, it's sharper that way.
Okay.
So we can follow it better. Thanks.
Okay, just so you know that when I have these clouds on, these are basically the 7 and 5, the 5 and 13 moving averages on this. If I were to take the cloud off and I put the moving averages on, you'll see that it's basically, oops, you'll see that the yellow line and the green line are basically outline the cloud. That's all that does. That's basically all that does represent the 5 and 13 moving averages that we use oftentimes to be able to follow the trend. But we'll take these off if it's confusing. If it's So
The
there we
moving
go.
averages are good. The moving averages are good.
Well, the
It's
cloud's the
just the
same thing.
cloud.
The cloud's the same thing as the moving average.
I know, but you can't, like when you're in the red
Can't see
zone,
candles as well because of the cloud.
You can't see the red candles. Okay.
Yeah,
All right.
yeah.
All right. Well, I'll just keep the moving averages off too, because right now we're just looking at working with the price action on this here. So right now we're looking at the price action. And so right now, when we get, if we, on this particular pair, the dollar is still strong. The dollar is the blue line, the British pound is the purple line, and the dollar is still strong. So therefore, if it comes back down, breaks through, gives me a 5-minute close on this blue line, and then comes back and retest the green or the trend line, either one. Actually, if it comes back and retests the blue, let me draw this out here. So right now we would have, this is what I'm projecting here with if we get the break and the close below, if we come back here, we can take a trade here. We could take a trade here. We could take a trade here. And then we'd be looking at the next one, for this next line for the target. So we have actually 3 opportunities. A lot depends on how much of a drawdown you want and how aggressive you want to be. If you want to be real aggressive, you can take it right here as it pulls back to the blue line. But your target zone is going to be this next red line. And then if once that breaks, you take your profit. If it pulls back again to here, then you could take the next green line, which is going to be right about in there. Go for your 7 pips, pulls back to the red line, and you can just keep on going until it gets to where your next area of operation wants to be. And let me see where and the next red line is going to be down here. This will be the next 5-minute red on this. But that's why we can kind of keep getting in and out of a trade, or you can just, depending on what your trading style is. And everybody's got to develop their own trading style to decide how they want to trade these. This is the methodology that we're going to be teaching. Where we have our trade plan set up. We'll make copies available of that once we get it approved. And so here would be the target. So the first one is it breaks through and closes, comes back up. Here's the next target. Now that when it comes up, you can, again, like I said, if it comes up, once it breaks and closes, which it has not done yet, then we have, this is the first entry possibility, be right off this blue line. And then this depends on if you want to scale in, you could, because a lot of times it may not just stop right here and keep, if it's a real strong move, it'll stop here and keep on going. But oftentimes it'll pull back up to maybe the next green line, which is 7 pips. That's another entry possibility. Where the arrow is. And then you can also look and see where with the trend line, you can use the trend line. If it breaks through the trend line, then you may want to rethink, because then it may be heading on up to this other green area. But this is 21 pips from here to here, 7 pips, here to here, 7 pips, 14 pips, 21 pips. And I said, we're using this to determine whether or not we have enough strength, enough momentum to be able to carry that trade on down. The US dollar is the second currency of the pair. And so, and we want at least a 3-point spread on the pullback to the favor the downside. In this case, we want the pullback. We want at least a 3-point spread. Right now we have a 7 and a 0. So we have a 7-point spread on this little pullback right here. However, it did not touch the blue line. So we can't take this trade. Right now it's still inside this wedge right here. Okay. And so that's how we drew this one out. And we're just waiting to see what it does. We'll keep an eye on this one. Remember, we have 8:30. There's at 8:30. This is our news announcement.
That's
Okay.
the red line, is it? That's the 8:30.
The red line, yeah, it should be at 8. That should be at 8:30, I think. Yeah, 8:30. But I'm gonna move it over 5 minutes so we don't forget. There we go. So we're gonna move that over at 8:25. So now that gives us a little 5-minute heads up. If we're in a trade, we may want to think about, if we're in a trade in profit, we may want to just take our profits. Or if you feel like you want to ride the news announcement out, make sure you give yourself enough room on your stops for any major volatility. So Okay, so that's what we have right now. So this is what we're looking for.
Sunita's asking, do you only mark the red folder news?
Pretty much. I don't pay much attention to the orange, and I'm not saying that the others don't have some value to it, but more often than not, it's the red folders that will give you the real violent whipsaws that you can oftentimes get. That's a good question, though.
And if everybody could please put the questions in the Q&A so they don't get lost in the chat, please. It'll be easier for us.
Yeah,
Thanks.
a lot of times you miss those in the chat. Yeah, the Q&A is really helpful. That way I can kind of look at it and see it too if I'm more apt to catch it on that than on the chat box. And so with that, right now we don't have anything right now. So with this one, we're just going to wait. I'm going to wait. I'm going to mark this with an alert. And alert on there. And when it crosses, and that way, if I'm on looking at the chart, I get the alert saying, okay, at least if it tags it, then the question is it going to close? And so with that, let's take a look and see if there's anything else to be looking at. There's a Japanese yen is number 2 in strength. Now the spreads on the Japanese yen. We'll take a look at this one here. Let's take the British pound is still the weak link in all of these pretty much. So let's look at the British yen. And we'll go to a yen pair. British yen right there. And I'm going to mark my 15-minute zones. And right now, here's my green, 15-minute green. Here's my 15-minute red. I'm going to mark that. The colors are somewhat significant in the fact that the blue lines are the strongest support. But just keep in mind that every time you have a higher time frame, and there's like a 5-minute or 15-minute line, is going to propagate over to the lower time frames as a blue line. So in other words, like this is a 15-minute green line right there. And if I come over here to where I marked that on the 15-minute green, and if you can see that if I put the 5-minute lines up, you're going to see that that's a blue 5-minute line as well. And it'd be over here, it'll be a blue 2-minute line. So just keep that in mind. That's kind of significant. That's why we always. That's why the 5 minutes are significant. I generally don't take these pullbacks and crossovers on the 2-minute. I usually reference either the 15-minute green or the 5-minute or the 5-minute. Either the 15-minute line or the 5-minute line, the fib lines. Like I said, these lines are algorithmically priced on a number line, not reference to the price action. Let's keep that in mind. These are just numbers on a number line where the prices tend to have significant support or resistance. And so this is going to be a red. And come over here to my 5-minute chart. And here's my 5-minute green. And so I'm just doing this so you can see it a little bit clearer.
Guys, as we go along, if you have any questions, please feel free to ask so that we can answer them like in real time as this is going on.
Now I want to point something else out here. This is the yen pair. And what I said, the yen is like 100 yen to $1. So the spread on these different zones are going to be a little bit different on the yen pairs because of that. Red here. There you go. So if before, like I was saying, remember I was saying that it's basically on the British pound. Let me go back over the British pound. If you look and see, what if I take my measurement tool and go from the green zone to the red zone, you can see that's roughly 7 pips. Here's my 14 pips. It's 13.7. It's close enough. And there's 21 pips. So right now between this green and this blue, we have 21 pips, and we've broken it down into thirds. If I go over to the yen pair, the British yen, and I measure the distance between the red and the green here, if I measure this distance, you can find out it's probably not going to be 62 pips. It's 55. So it ends up being a little bit shy, which means that rather than this area being 21 pips between like this red dotted line and the green dotted line, you see it's just a little bit different in the value. Rather than being 21 pips, it's now 18 and a half. It's close, but it's still not quite the same.
I do have a question for you, Al.
Okay.
Regarding your 15-minute fib lines.
Okay.
Sunita is asking, does the green line go at the lower end and the blue at the upper end? I think you may have to illustrate how they pop up for you on a blank chart.
Yeah. Let me just take these off right here. If I, with this tool,
can you expand that chart? Sorry.
Okay.
Can you just expand that chart so you can see the whole thing?
Okay, here we go. Now this is going to be, since we have a little bit of time here, we're going to go over this a little bit. Here's my red. Remember I said these lines are color coded. We have a blue, green. Now don't confuse this with a line. That's just the price right now. So we have a blue, green, red, and then it goes back to blue. If I put this, let me illustrate this a little bit. Second here. Let me get this up. The labels, indicator labels. There we go. I'm going to take the moving averages off. You can see where here's my blue line. It says FRP. This is our Fibonacci plotter. So there's our blue line. Here's our red line, green line, and then back to a blue. These are all color coded on the sequence of the how this thing plots it out. So
and the importance of the blue, Al, the S and the R, the supply and resistance.
The support and resistance. Basically, the blue lines are the strongest. Okay, so even though, these are where we look at. Now these are basically the biggest spread. This is where these are the more blue the number, the more pronounced the price is on the number line that the institutions are looking at. In other words, if I were to draw this on a 1 hour chart, let's say put it on a daily. Let me just put on a daily chart here. See if I can use. I'm not sure I can do this. If I put this on a daily chart, you said we're still going to have the same blue, red, green, back to blue, but you can see that. Where the blue lines are is going to be more of that's going to be more where the hedge funds and your banks and your institutions are going to be looking at these numbers more so than this one here. It's just a little bit stronger number, a little bit stronger number on the number line. But the fact that we're scalping, we don't need to be looking at daily timeframes. If we're only looking for 7 pips, we don't need to be looking at daily timeframes. So that's why my focus chart is a 15-minute chart. And I use the 15-minute clock speed on the Fibonacci's, which brings it in a little bit closer. But the blue lines are still significant. But if this were a blue line on a daily chart, it'd be a whole lot more significant than just a blue line on the 15. Now, if I put this blue line here, let me just mark this blue line. This is a blue on the 15. 15-minute blue. And I go to my, remember this is blue on a 50. Now this is going to be some other color on a higher time frame. It may be a blue, I'm not sure. Let's see. If I go to the 1 hour chart, you're going to see that this blue 15 right here is the same as the blue 15 blue on a 1 hour chart. If I go to a 4 hour chart or 4 hour time frame, it's also going to be blue on the. So this right now, this blue line right here is a very significant because it's blue on not only the 15, it's blue on the hour, it's blue on the 4 hour. Let's say the dailies, but it's a red line on a daily chart, which means the blue on the daily is going to be way up here, which is going to be even more significant to the institutions. This one's still fairly strong because this is not only blue on the 4 hour, the 1 hour, the 15, the 5, the 2. So this one covers a whole lot of different time frames. So this blue line right here is really significant. Okay. Hopefully that helps make that a little bit clearer.
And just a quick aside to those that are asking, there's a few people asking about these indicators and the trade strategy. The trade strategy is being checked over by Mariska in compliance before we can actually give it out to anybody. So it is coming from point A to Z, as you say there, Noah, Katerina. It is coming. And the same with these, the indicators, those are also coming. So right now, Al is using them to show you how to use them. They're unavailable at the moment, but they will be shortly. Auvoria Prime is working on them.
Yeah, we're working with working with Auvoria Prime. We've got some hoops we have to jump through with compliance. We have hoops we have to jump through with programming to be able to get these things programmed and also get it into the product list of the with the back office. And just there's only so many people to do so many different things, and they're working on it. But what the time? I wish I had a time frame for you to be able to give you for it. Unfortunately, I do not.
And we're working on getting them across the platforms, hopefully for the MT4 and TradingView.
Correct.
Just so you guys are aware. So you'll be the first to know. Trust us.
Yeah. So now this is something I want to. This was someone was asking about this yesterday, and I wanted to kind of qualify what I'm trying to do here. So right now I'm on the 15-minute chart. I'm on the 15-minute clock. So I'm looking at where the price is, and I'm looking to see which color zones is this current price ranging into. Now, right now, here's my 15-minute blue. Here's a 15-minute red. So I'm gonna mark that. Sometimes it's more important to go over things like this than it is to actually take trades here. So that's kind of what we're doing today. 15-minute red, because this is the meat and the basis of why we do what we're doing in this room. Now I want to just give you a comparison here. Now, if people that were in the room before, say within the last week or two, you'll notice that what I was doing. See, here's our red. Here's our green. I need to make this one green. Let me make sure I got the. So you can see the labels. Yep. Make this a green. Okay, so this is my. This is on the British pound, so the numbers may be a little bit skewed, but you'll get the idea here. So this is my playground. Now, if people were with us before, a lot of times I was looking at a pivot high, a pivot low, and then drawing using the basic fib line, which would have been from, which would have been from this pivot high to this pivot low, and then this would have been my playground, and then we would take the thirds and all the sorts of things, find the upper 25% of the zone and lower 25% of the zone. What I've found out that that's not really that much different, and it just this way it's caused me given me a little bit better, a little less drawing, a little bit more explanation time. So I'm going to draw from here's the top of my Fibonacci by two blue lines. Basically, I'm going to scroll that right in between here, and this is my upper 25% of the zone. Actually, let me do this on the British US just because I think it might be a little bit. Let me just start this thing over. I'm going to go to my 15-minute chart. The numbers are going to fall a little bit better on this one here. So here's my 15-minute chart. Put my 15-minute clock on. My price is in between the green and the blue. And I'm going to draw my zones. Here's my blue zone. Here's my green. Okay, so there's my zone. Now, if I go to my 5-minute, and this is where it starts getting interesting. Check my clock, make sure my 5 minutes, that's all my 5-minute. I'm just gonna go my 5 minutes clock zone. Now, we still have the same 15, 15. You can see this is now broken up into thirds. And if you look at these red lines, so I'm going to highlight those a little bit. These are my 5-minute zones. Here's my
I think the top one's red, right?
Yeah, this is the green, and this one's going to be the red. Now, this is where I want to show you something here, 5-minute red. Okay, so now I've broken this down into thirds. Now, if I were to be drawing, okay, let me get, well, I can do one more. I got to do the 2 minutes too. Come over here on my 1-minute chart. Now, it's a 1-minute chart, but I've got 2 minute, it's a 2-minute clock. So basically what I've done is I've taken this area from the green to the blue, and I've broken up into 9 different sections. I've got 3 sections here, the lower part, 3 sections in the middle, and I'm going to have 3 sections in the upper part. And now the fact that the price is all the way down here, it's not going to propagate, but we can fix that. If I take 2 of these sections, and if I move it on up to the top of where the green is, the green line is, I know that I'm going to have a green line right here. That's going to be a 2-minute green. And if I break this thing down into a half, which I'm going to be doing with a 25% red, and I can take halfway through this, and right about in here, I'm going to have a red line. Now, if this price was up a little higher, these lines would propagate. They won't do it, but they only go up so many up above the price and so many below the price. That's why it's not up here. I'm just having to draw these freehand. Okay, so now if I draw a fib line, the standard fib line that we usually draw, and I draw from the top of the zone to the bottom of the zone, you can see that the 25% area is right where this green line is. So for all practical purposes, and oftentimes it may be depending on the exact price, it may be within about a pip or a half a pip. So basically, this is the upper 25. And down here is the lower 25%, which is right where the price is right now. So whether you draw a fib line, the standard fib line, what we use with the standard values, and I use the 23.6, and the values I use on this fib line, I use the 76.4, the 50, and the 23.6 to identify my upper and lower 25% zones. You can see that basically two of these 2-minute lines is roughly 25, the upper 25%, two of the bottom lines, and then you have 5 lines in between, which is where our playground is. So basically, rather than drawing this fib line right here, I can just take that off and I can just say, okay, if I have 2 lines, I'll just tweak that a little bit here. My 2, and this is going to be 7 pips from here to here, 7 pips from here to here, 7 from here to here, 7, 7, 7, 7, 7, 7. And so with that, it saves me a little bit of drawing. I can just tweak this down here to where the line is. Make this one green. And so now I've identified my upper 25%, my lower 25%, and I've got my playground in between. And so basically right now, I do not want to be taking this thing short while I'm in this green zone, unless it breaks the blue line. If it breaks the blue line, this now becomes red, this one becomes red, and now we're looking to come on down to the lower part. But right now, this is where we are. So we're looking at taking this thing long. So with this British pound, until it breaks this, if it comes back up, and starts, and I'd probably like to see it get out of this area first, come up here, close above, come back, pull back between here, or where a trend line that I can draw, and then I can start taking it. But right now, this thing's consolidating. It's in the middle of this 21 pip range, and I'm not going to be taking it till I can see where the momentum is starting to change to the upside. Now you see that this is the British pound is strong. We have strong by 3. But I like to see it. These are the more pronounced areas of operation. So I want to see, at this point, I'd rather see it come up, maybe close, maybe give me another chance to come back down, depending on what the momentum is here. So right now, this is not a trade because, one, it's in the green zone, and I want to see it get the momentum to the upside. I want to see it close above here, pull back, and then start looking for areas to go long. So I want to see it. Oh, come on. Where's this? There we go. So I want to see it come on up, close above on the 5-minute, retest, and then I can start taking this, and there would be my target, come back in, maybe re-enter again, take another target, or if I want to try and trend it, have it going up like that. So this is the price action I'm looking at for here. Now I can take the trade. If it comes up and breaks through here, I can take the trade here at the 2, or I could take the trade if I want to scale in. I could take it here first if I'm real aggressive, or I could maybe wait till it comes back somewhere in between here and maybe do a buy stop on this line, waiting for it to come on up after the pullback. Or I could just take if I'm, depending on what my trade strategy would be, or what your trade strategy is, you can maybe take it if it comes back somewhere in between these 2 arrows, take it, and then, but this is still going to be your target. This is going to be your 7 pip target off of this confirmation that it crossed over, closed, pulled back, and then is your first target 7 pips, re-enter, second target, and oftentimes you'll see this thing just goes back and forth like this in the slightly 7 pip range. So that's what I'm looking for in this. Any questions? Let's see, gold is setting up for a nice little drop. Let's take a look at gold. Right now, this is no trade. Get my gold, get my 15-minute chart up, mark my zones. Let me take my moving averages off here. Make sure I'm on a 15-minute. I am. Here's where the price is. Here's our green zone. Here's our red. This is our playground right now between here and here. So there's our zones. Now we're going to come over to our 5-minute. And we're going to mark our 5-minute zones. Now with gold, I think yesterday we talked about gold a little bit. I think we were actually using the 1-hour chart because of the difference in the, with the price being around the $1,700 mark. It's going to get a little bit more volatility. Here's our playground. Actually, gold did have a nice little move all the way. Where's our daybreak here? Had the overnight. Here's about where the London session opened up, right about where this thing spiked up, made a high. Now it's coming back down to retest this area. Okay, so right now here on the 5-minute, we had the 5-minute close. It's coming back up to retest. We have now, I'm not sure where gold fits in the scheme of the currencies, but right now the dollar is weak. So the gold is also showing weakness. So,
Which is a bit of a,
yeah, I don't even like, I don't have a correlation with the
yeah.
major currencies
Usually
on
when the
this.
US dollar is going down, gold should be going up. And when it's doing this, then it's anybody's guess really which way it's going to go.
Yeah, it's not really,
Gold, you just gotta have to be Eden's really careful with gold. Sometimes you just get lucky, but other times, man, oh man, I've seen some of the best gold traders get totally eaten alive by it. So it looks like it's doing one thing, you get into it, and all of a sudden, bang, it goes the opposite way.
and now you see here are between the heavy dotted lines, you've got our dash line. Now we got, this is our thirds. These are our thirds here. So, and right now I'm going to take something off here. Take that off. So we had the 5-minute close below. Now it's coming back up. It retested here. You can see where it, if I expand this out, let me put the 5-minute chart on. Here's where we had the 5-minute close. We had a nice strong move down. 5-minute close, came back up and retested. So here was the price action. Here's we had a 5-minute close right here. This was a candle closed, came back up, retested here, and then it came back down. Now, if we look over, oops, there's just go back to my 1-minute chart here. You'll see with the gold, the 5-minute candle closed. This was the 59 right here. That was the candle that closed. And you see that it came down, closed, came up, hit our line. We can enter the trade here, and then our target would have been down here. Actually, this has been the first target. So actually, you can see how much more violent it is. It's covering actually 2 of these zones, which from a dollar standpoint, that's one reason why I said, well, yesterday I think we drew this on the dollar. So right now that was, this whole move right here is looks like $1. $1.39, but it covered 2 of the zones. So that's why I said with the gold, I might, rather than using a 15-minute time frame, you may want to use the 1 hour. If I take all these off right now, you'll see here's where the 1 hour zones are, which is actually a little bit, I think it's probably a little bit more realistic for the price movement of the gold. Now, as I'd be looking at this line. Oh, come on, where's this? There we go. I use this range, blue to blue. Here's the upper 25. And you can take your pick which way you want to. If you have MT4, you don't have these, you can do it, using the basic Fibonacci retracement tool. You're going to be close enough, so it's not going to be that different. And then here's the lower 25. This establishes the playground. And then we can put our, now if we use our 15-minute zones, we can use the 15-minute zones like we did with the just basically just scale everything down a notch. Here's my 15-minute. This would be the equivalent of that 5-minute red zone. And then if you look and see what the range of these are, I said this again with gold, it's a little bit different ballgame because of just the value. I mean, it'd be the same, probably a little bit different with cryptos. When you're talking about $40,000 for one crypto coin, it's basically on a $46,000 or $50,000 move. There's no point trying to. It's not going to be working with $1 and $5 moves. It's going to be working with $50, $100, $200 moves. So right there, that's a $6 range, which is a nice, comfortable range for something like gold. And so, and you could be, and then again, you could be breaking this thing down into thirds, again with a 5-minute chart. Remove the 5-minute chart here. Now you'll see I've got the breakdown between here and here. I've got, here's my green, here's my red. Okay. Then you just use the same price action. You got the close below, test, target 1, target 2, target 3, retest, and so forth. But right now, I say this thing's on a little bit of a pullback right now. Dollar is getting a little bit stronger. Gold, once this pullback is, we have a little trend line. This is a strong move down with the retracement. Okay, yeah, that's gold. I don't know what to say about it other than the fact I don't trade it. Questions? You see how close this 25% is to the screen line? That's why I said I can just move this thing right on up there, and that's close enough. You can see that here's my red line. It's got a little bit of an overshoot. I'm just going to back it off just a little bit. There's my 25%. It's close enough. And that way I don't even need this part. I've identified my playground. I've identified the range. Right now it's in the middle between the two. I like to see it come down, maybe give me a chance, come down, break, maybe come down and retest this, but may come up and just reverse positions in this area. I'd be willing to take it long. If I get a reversal going to the upside, I'd be more apt to take it long to the up in this area. Here's the playground. Wicked up. Come over here, you can see this was where it left. It came back, never got back this deep. Here was a retest, it closed, but then it started going back up again. This area right here is significant to where I would be looking, on this one, I would be looking at it to be, well, I'd be looking for it to be coming down, maybe wick down here, close above here, and then be looking at this area like that. Because I think this is going to be an area. This is where the price is rejected before. It's rejected over here. I expect it may get rejected here. It may come down a little bit deeper, but then once it gets a close back above, if it closes above, it could come on down. But I'd be more apt to say I don't want to be taking it short or in the green zone. I'm gonna wait for it to come back up, give me a reason to go long, and then try and catch it to where it comes back up into this area. That's my story about that. Let's take a look at the British, see what we have here with the British pound. And see, let's look at our Hercules and see what we have here. yen is strong across the board. So the yen is strong. New Zealand is the weaker one. And that's all across the board. So let's take a look at the New Zealand yen. New Zealand yen. So I'm going to get my yen pair. And we draw it out. I know where our fibs are. Check where the price is. It's between this red and this green. Again, here's my lower 25. I'm just drawing the same thing, just drawing different ways. So you have options of how you want to draw it. Remember I said this is about 25% there. Make it green. Take the upper 25. Make this red. Establish my playground. I'm done with this right now. Come over to my 5-minute chart. So see that the New Zealand dollar is the yellow one. That's weak. So it should be looking to take this thing short. Here's our 5-minute red zone right here. Wait, make sure we get the right one. It's at 77.52. Did not get a 5-minute close below it, although it's working on it. $52.5, 52. We're going to be watching that. We're going to be watching this. Make sure we have a 3-point spread. If we get, that's a nice little doji. That's a little drop, little base. And I would be looking at another drop into these thirds. Come over here to get my 2-minute zones on there while we have some time. And we're coming up on 8:30. We have a news announcement with $1.
Wonder what it's going to do this time. It's always fun to anticipate.
There's 8:30, so I'm going to mark it over here. Just there's 8:20, 8:27. That's 3 minutes before. You can see right now. So at 8:29, if we get actually, at 8. Here's the 8:30. So the last candle before this vertical line, that's going to be the 5-minute close on this 2-minute chart, or on the 1-minute chart. Get my fib lines up here. You can see see this green line? See how close it is to where I drew that off the Fibonacci? So I get here, move this over so we can see it a little bit better. That's why I said I'm perfectly okay with just moving this thing up to the green line. Here's the middle, here's my red line, the green line. This is our 7-pip. This is, now remember, this is a yen pair. So if you look and see what the range is between This line and this line is probably going to be a little bit less than 7 pips. See, that's only 2.5 pips. That's 5 pips. 2 of these lines is 5 pips. Look at the move. Here's the move starting to come in. Let me mark this. So we have an announcement coming here in about another 2 minutes. Here's red. Here's our green. And take this off now so I don't get that little. Again, we do not have a 5-minute close yet. And by the time we get to close, it's about right when the announcement is going to happen. So we'll see what this thing's going to do. Right now, this thing is showing Japanese strength. That means strength to the downside. And that's what we, and that's, so that's still in effect. Go to our 5, now we have everything drawn on all of our zones drawn. We can go to our 5-minute and wait for that 5-minute close. I like this little drop base. I think this thing's going to drop on down here at the announcement, but we'll see. Again, I don't like trading announcements. If I'm not in the trade, I just wait till it announces, plan the trade, but I'd be willing to take a bet that this thing is going to drop on down. But I've been wrong, and it could just wick right up and then drop on down, depending on how strong that announcement is.
And you have a double doji there.
Yeah. Right now, it's just waiting for the announcement right now. And we have about another, what time is it here? 8:23. Actually, we have some time still.
Eden's got filled on his gold order.
Did you go short? Did you go short, Ian?
He went short.
Went short, yeah.
Well, let's watch and see how. So so right now we have a, see, this is we go back on the 5-minute chart here. Now this candle has not closed yet. This one still has, we still have another 1.5 minutes before this candle closes. And this is what I'd be looking for if I were Ian. I'd be waiting for this. So it's straw move down. Here's the origin of the move. I want to see this candle close. That's me. And they have different criteria, and he trades gold a lot, and he seems to be doing pretty well with this. So I'm not going to pass judgment on his methodology. But from our method, I'd have to wait for this candle to close and see if it closes below this green line. And we have another, let's see, another 21 seconds. Right now it's looking pretty good. This is a 5-minute zone right in here. Let's see, what color was that? That was green. This was actually a blue one here. Okay, we got the close below. Now it's okay to take that trade. Right now, this is in the first third, pull back. Nice, pulled right back to the screen line. He's in the trade. So he could take it here, he could take it here, he actually could take it up here. And he's about ready to go down to his first target. And so I like the gold on these next level higher time frame. So you did a good trade there, Eden.
Eden's, yeah. Yeah, good stuff. You must be out of it by now. He was going for a $3 move, 30 pips.
This is the first target right here, the red line. Oh, wait, is that right? Let's measure my zones here. This would be about right, about $5 move, $4 move right there. This would be, these are the the next thirds to the next zone. Here's our blue line. So here's our, see, green, blue. This would be our, this would be the equivalent of our blue line, 15-minute blue. And you can see here's the third. Here's this is the middle third right here. You can see it hit that first target. And it, again, just depends on how much he's going for.
He's already out.
He's already out. Good for you.
Yeah, he's out with his 30 pips.
There you go. Nice trade. I may have to start following. I may have to start trading gold here. He's making some good calls on that. Thank you for that, Eden.
He says, thanks, guys. I wouldn't be doing so good if it wasn't for all of your help.
You can see, like, you can see how this little wick right here is, see how that came right up to that red line? Hell, see how this thing came right in between these two? Came right down to the red line? Or is that a price? No, came right down to this one, wick down. Now the spread may or may not have gotten you out of this. If you had your target right here, you may still be in this trade, depending if you took it out yourself, because the spread, you got a 31, looks like a 31 cent, yeah, 31 cent spread. But from here to, that's 84 to 30, yeah, the spread may have gotten, you still might have gotten out of it, but you have to be real careful when you have to be watching, paying attention to these spreads on this. Let's go back to our British before we miss that possibility. New Zealand. We still did not get the close. Still did not have the 5-minute close. I did that just barely closed below there. That's this candle right here. It did close below, just barely, but it did close. It qualified it. And nice little pullback. Remember, I said this was a drop base. I said I felt like it was gonna come down. And here's target 1, target 2 is almost going to target 3. Actually, I would use 2 of these as one target zone. This is all, the announcement is just now happening right now. The announcement was right at the beginning of this candle. This candle right here. Well, that was a more confirmed 5-minute close on that. If I looked at my 1-minute chart, spread this thing out a little bit. I have this thing set at 30. This candle right here was the 5-minute close. Close here, came up, tested the line, target 1, target 2, and almost target 3. Like I said, with the yen pairs, you can maybe spread these. You can almost use 2 of these zones as one target. If I go from this to here, you're probably looking at, that's probably about your 7 pips, maybe a little bit more than that. 2 zones is 5 pips. 2 of these little sections is 5 pips. If you're going for a 7 pip target, you almost have to come all the way. You almost have to take the 3 zone area. That's why I say a lot of times with the Japanese yen, again, you can do that almost like what you do with the gold is just move it up a notch. Use the 1 hour chart, the 1 hour zones, and then use the 15 as your 5s, then your 5s as your 2. Hopefully that didn't confuse everybody. There's the upper 25. Okay, let's draw this one out on here. Let's see. I'm on my 15-minute chart, but rather than using 15-minute zones, I'm going to move this up to an hour. Redraw everything. So here's my hour zones. Here's my red. Here's my green. Here's my playground. And then it's just, you can do it this way too. I mean, you can do it this way. There's nothing wrong with doing it this way. This might actually be a little bit faster drawing it, actually. Here's my green zone.
Al?
Yes.
And what is your reasoning for changing the time frame to 1 hour?
Because the zones, when you're on a 2-minute zones on the Japanese pair, you're only looking at about 3 pips. It was almost 3 of those 2-minute zones on the, when we were usually like 7 pips on those 2-minute zones, they were 7 pips on the other pairs. With the Japanese yen, there's about less than half of that. It took almost 3 of those zones in order to get your 7 pips. So what I do is I'm just sliding everything up one clock speed basically, so that I can get the range in between these different levels.
Right. Okay, thank you.
Okay.
So does that mean then that the likelihood of the trade taking a little bit longer is higher, I guess, is it?
Well, I'm not sure if it'd be longer because, I don't know the answer to that question. It all depends on what the price movement of that particular pair is. Now you say when that announcement out, it covered 3 of those 2-minute zones. In essence, like right now, if you look at these levels right here, let's measure them out. You can probably find this is probably going to be pretty close to 7 pips. I'm thinking 16 pips. 16 pips.
16.
Yeah, that's 16 pips. Like I said, the yen pairs are just it's a little bit different animal because of the.
Yeah, it's just the way it is.
It is what it is. It's because of the value of the yen to the dollar.
I don't like them.
I'm not a big fan of the yen pairs, but the nature of the beast is that it does trade a lot. I'll just move that up here. Here's this should be my 5-minute zones would be almost like the equivalent of let's see here. Here's from here to here. Yeah, there you go. See that? That's closer to 7 pips. But now I'm on 8. So basically, if you just knock it down just change the clock on one setting higher, it gives you more reasonable zones this way.
Everybody understand that Al's using this fib tool to actually for his targets and whatnot, and that's why he did that.
See, this would be the equivalent of a dotted line. Uh, 5 minutes. You can see that. So basically, the lines are still there. Now the question of what the separation is. Now, I like the separation a lot better. So if I go from here to let's go from this one to the green line. You're going to see this. I believe this is going to be pretty close to your 7 pips. This is 7.1 is close enough. Next one, 7 pips, another 7 pips. So these would be our target zones on this particular pair. Okay. So right now we had the 5-minute close. Now we're waiting for the retest. And we're waiting for the retest with the strength to the yen to the short side. And you can see where we had I'm on a 5-minute chart. We had the close right here on this red candle. Spread this thing out a little bit. We had the close on this red candle. It pulled back, gave us now you could have gotten in here. You could have gotten, when this thing candle closed, you could have gotten in when it pulled back into this area right off of that candle. Now it did take you up a little bit higher, but you want to go short. Here's our wedge. Here's our trend line. You could take it short here. You could take it short on test of the trend line. You could take it when it comes breakthrough on a sell stop and to your target 1, target 2. So this was all during that during that announcement thing here at 8:30. Well, actually, that was before then. That was here at 7 o'clock. Yeah, that was at 7. This one here was at 7. That was before we got started this morning. Is all this making sense?
It seems to be.
Better.
It's making sense to us, so I can only assume it's making sense to.
So like I said, when this thing closed, you could take it at the red line, or if you wanted to wait, if you were now at this red, when it got to this red line, you can see where the New Zealand dollar was. It was right at the crossover. So you have, I mean, you could still take it. It's still been a valid take. This one, now the New Zealand dollar is stronger. That means it's going to the upside. But now you had to cross back over again right here. Once it crossed over, once you got to second cross, now you had the yen. This was probably a safer one. Now the yen was stronger to the New Zealand. Yen is the second currency of the pair. That would be the break to go to the downside. And you can see right now you can stay in it. The yen strong, strong, strong. It's looking to add a little bit of a retest right here. It's still strong. Still strong. especially when this thing starts pointing up and closes start pointing up. I'd be looking for that turnaround to maybe re-enter to the short side. Questions?
None here.
You can see that our moving averages are still in agreement. We haven't been using the moving averages, but you can see where the green one came right up to the yellow, right about all this consolidated. We had the trend line, you had the green coming on up, couldn't cross over, got to close below it. We actually have a little bit of we have our little Sherlock tool probably would have been pointing out this little area right in here. This would be Sherlock. You can see that's right at the trend line. So this thing's still short. Here's a drop. Here's a little base. I'd say there's another little Sherlock tool right in here. There's a little doji. Right at the red line. I don't like this big wick to take it short right now. That's a real, the buyers came right on in here. It came right down close. The buyers drove it right back up again. This is a point of where it could be starting to look at, and you see right now, they're both fighting for last place. I like using these dashed lines or the solid lines for my entries. I use these for my targets. So right now, I would not want to take it short until it got back up here around where the Sherlock is. A retest of the trend line, retest of the dash line, and then I can take it short again for here or to here. Okay. Let's see if there's anything else developing here. US, New Zealand, US, New Zealand, US, New Zealand, US, New Zealand. Take a look at that. US.
Yeah, on all four.
On all four. US, New Zealand. And probably New Zealand, US. Here's our chart. Check my 15-minute. All very mechanical. Keep doing the same thing over and over again. Make sure our numbers are right. Here's our price. Here's our zones. We want to be real quick about this. Just draw like that. Find your upper and lower 25%. There's our playground. We move that. We're done with that. And now we're looking for our 5-minute zones. And they're going to be in between. Here's our green. Here's our red. There's a red one. There's a green one. Here's my 2 minute. I'm just going to tweak it right down to there. My 2 minute, tweak it right on up to that. There's my upper third. And here's my price. Here's my, right in the middle between this one and this one right now. So there's no trade here. I want to see it come on up here to give me some indication to either go higher or come down here to see an indication to go lower, or come back up to bounce up into this area. This is our playground right now. Right in there. Here's our 20, this should be our 7 pip range. That's 24 to 17. There's 7 pips, 7 pips, 7 pips. We're just trying to get 7. And when I say 7 pips, I look at the spread, and you can subtract the spread from those pips. So oftentimes I'm looking at 5 to 7 pips. If it gets to 5 pips where I close out with a 5 pip gain, I'll take the trade. And I'd wait for the next trade to move on. Right now we have nothing. We did get the 5 minute close right over here. Go to my 1 minute chart, you'll see what the price action was. There was the, let's see, that was at 8:05. Did not get a close. Let's see here. If I go to 8:10, 8:10, this candle closed. This candle right here is a 5 minute candle closed, came up, got us in, target 1, target 2, target 3. This was all right around that announcement here. Actually, that was a little bit before the announcement. Again, it's the same, it's very mechanical. 5 minute close, retest, targets. And once it gets up in this area, we're looking for another short to go down. This is our playground. And it may not get all the way down here. It may come down to this green line and give us our chance to go long. We may get a nice little range where it may come down from here, come down, close, come up. You may think it may give us another close. If it closes here and then closes again up here, I'd be more apt to take it with this to this area to that area. That's pretty much what I'd be looking at off of this, because now we're getting really down close to where the buyers are going to start coming in if it stays within this range. The Hercules tells us whether or not we can take those trades. Right now, this thing's still showing the dollar is strong. Dollar is the second currency of the pair. We're looking straight to the downside.
Al, quick question for you.
Okay.
Could you just quickly show Sunita how you get your scale prices to only show the 4 digits instead of 5, like what the setting is on TradingView?
Well, yeah.
Scale.
Just right click on your chart, go to your settings. And let's see, I gotta find this symbols. I think it's, you go to click on symbols, and then down here it says precision. If it goes 1 to 10,000, that's your 4 digit. If you go 1 to 1,000, that's going to be a 3 digit. You can see that's 3 digit now. If you want to go to 2 digit, go to 1 to 100, and now you've got 2 digits. So 4 digits is 1 to 10,000. 3 digits, and then if you want just to 2 digit, which is basically what your yen pairs would be, just go to 1 to 100.
Thank you, Al.
Okay. That was the easy question.
Yeah, it was.
But it is one that's
That is ridiculously easy.
yeah, it is one that I spent I spent a lot of time trying to find out where that spot was, and then but I've used it enough now to where I can find it pretty quickly. And if I don't use it again thank you for bringing that, because that way maybe you have to rethink about it so I don't forget how to do that.
There you go.
I do things, I do it, I can't find it, then I finally figure it out. So, okay, and by the next time I need to do it again, I can't remember how I did it. So right now we're now the fact that this thing came down and touched here, we can actually take it short if this thing is still in agreement. But right now, so this would have been where you have taken some profit. Now the fact it hit the green line, you can come back, you can take it short again. I probably should clarify this, a little bit. Here's where we started. It hit this line, took profit. Now, if you're still in the trade, every time it hits another section here, you can take it short at the next when it retraces back. So it was like with this section right here, and this is where you can kind of trend it all the way down in between here. So here's a target. It hit the green. It came close enough for me to say, okay, it hit the green line. With that, when it pulls back to the red line, I'm okay to take it short if this thing still says to. Now, right now, New Zealand is the yellow one. This thing says, I don't have a 3-point spread. I can't take it short right now at this 2 level because this is not confirming that it's still going short. Once it broke back, once we have this from that point, here's where my red line was right up in here. But on this candle, you can see right now we have strength to the US dollar. Now I can start taking it short. And you can see where I have this nice little doji right in here. So at this point, I would say, okay, at this point, I can maybe do I could say take another order to sell it here at the 2. Got confirmation, got the strength, got confirmation. Now I can take it at the 2. And more than likely, if it comes back up that close, just do a market order. Now you're looking at this being your next target. So right now you could be in this trade for the second time, because here would be your first target. Came back down, allows you to get in around this area. This allows you to get in, and you can use this for the target and then see if it keeps on going down. But right now you got the cross back over again. So right now this would not have been a real, because after about 3 times, you're starting to, once you start getting the 3rd level, this is actually the lower third of this zone right here. This area right here is the lower third. And as you get closer and closer towards the market open, things start to consolidate a little bit more. This is really this is the lower third of from here to here. Here's the middle third, here's the upper third. Like I said, everything's placed in thirds. And I find that to work out very, very well. Upper third, bottom third, and then here's your middle third. And if you just go for that, just use these thirds, just go for your 7 pips with higher lot size, you'll be very successful trading with discipline. You see it's coming on up here, test here. Right now, this is the middle. This is where if it comes up in the upper area, now you could probably take it short. I'd probably almost even be okay with taking the middle of that if it comes on up in there, using this area for a stop, if we have the direction. But right now, this thing's starting to, they're fighting to see who's going to be in last place here on this 1-minute chart. Go to your 5-minute chart. The dollar is still strong, so we're still looking at strength to the downside. This was just a little bit of a pullback. Yes, Eva.
Patrick asks, but didn't you say that the Hercules on the 1 minute doesn't matter so much?
Yeah, that's exactly right. I'm glad you caught that, because you're looking at it on the 5-minute. This is just telling you the pullback. we do have the 3-point spread on the 5-minute. Yeah, thank you for clarifying. I just noticed that myself. Glad you mentioned it. Yeah, we're looking at the 3-point spread on the 5 and or the 15, preferably both of them. So right now, this is saying this on a pullback, which it is. This is still saying, even though it's on a pullback, it's still valid because I still have I'm still at a 4 and a 0 here. So with that, if it comes back up to this area, I could be okay taking this thing short again, right up in here. Then you'd be going for your 7 pips. And preferably, I like to see this thing actually flip before I got into the trade. It doesn't always happen, but when it's like this and you still have the spread here, you have a nice 5-0 spread, 5-0 spread. This thing is not going long anytime soon. A little bit of a basing here. Got a little trend, a little wedge right in here. If I draw a little wedge, this is where you start seeing these different price patterns. Looking for this thing to start giving it up. Now this thing starts getting wider and wider. You'd be able to just hold off a little bit. You're still good to take it short, but I'd like to see this thing start flipping over. It's coming on up to the red line. Still have a nice spread here. It's coming up to the red line. We had a near touch here. So right now I can take it when it comes on up. Let me do a sell limit right here at the 70.17. Take profit, stop loss, 15. Take profit 7. 2%. Value 17. Sell order. Sell limit. See, here's our spread 1.5. It's got to get up at 1.5 beyond this before it's going to trigger this. There it goes. It just triggered it. I've got my stop set, which is way up here. A lot of room to the upside. It's got to get through this little area. Now this thing starts flipping over. I'll be out of it before it gets up to this. If it gets up to this area and starts giving me a confirmation it's going to start going long, I'll get out of this trade and maybe reverse position if everything looks right to reverse it. This is my key area up in here at the top of this red box.
Al?
Yeah.
At some point before the end of the session, could you, since I can't access that link for whatever reason to get into the Trade Masters community?
Oh, the Trade Master channel link you talk about?
Yeah. Could you possibly put that in the chat so that everybody can access it?
Yeah, let me do that. I think I know how to do that now.
Okay.
Invite link.
Yeah, I just, for some reason, I can't copy.
Copy and everybody and Paste. There it is. That's our Trade Masters community right there. You can come in. You're welcome anytime.
There you go, guys. Thanks, Sherry.
Remember, here's my target. Now, remember, with my target being right here at this green line, I've got to take my spread in consideration. So remember, it's going to have to go 1 point, almost 2 pips beyond here, which is that this is at 70.10. So at 70.08, it's got to, this price has to come all the way down to 70.08 before it's going to hit, before this wick is going to have to come all the way down here before it's going to take my trade out because of the spread.
Eden's great session today. Hopefully everyone made some money. A pip a day keeps the bills away.
Yeah, that's about right.
Go, Edens.
See, so right now, as I'm coming
Very
down
funny.
into this, as we're coming down into this, I mean, here's where my target is. It's right at the green line. There's my target. But now the question is, will this have enough energy? Now we have a nice spread here. You see how this thing flipped over now? We have the strength on the Hercules is saying that the dollar is strong. And the fact I was able to, the fact I'm using such a tight stop, I can take a larger lot size with this. If I had a 40 pip stop, this would be about only 10,000 as opposed to 41,000 in units. So I don't need as much of a move. So I don't have to wait all day long for a 100 pip move just to make my money, because I can take 4 times the lot size. If I had a 100 pip stop, this would only be like maybe 4,000. So you're taking 10 sides, you're using the same risk, but you're getting in and out a lot faster. And one thing we have to be a little careful, we have a wick here, we have a higher, here's a low, here's a higher low. If I draw a trend line, we have to be a little bit careful with this. Just be aware that this still exists. This trend line now has some value. We did not get the close below this trend line. Here's a low, higher low, still an even higher low. It's got these little wicks right in here.
Al,
Yes.
Patrick would like to know, is it possible to see the spread on NT4?
The only way I know is if you just, let me get an MT4 chart up here.
Have to do your own math, really.
I think you have to do your own math, basically. Yeah, it doesn't show the spread like it does up here on the trading view. There's a little. Let me see if I can pull it up here. Let me slide this over here. There's a little window up here. There's a little drop down arrow up here in the corner, which opens up that window. If you drop that down, all you have to do the math. Right now, it's showing 80 to 81.7. So right now you've got a 1.4 spread. It keeps changing, but that's what you have to do your own math on that. I don't see where it has a spread calculator. Yeah, I don't know where there is one. If there is, I don't know where it is. Now you can get a free version of TradingView, just so you know. You can get a free version of this. The free version doesn't give you but one chart. It only gives you, I think, 3 indicators that you can put on. But you can get on TradingView and you can just subscribe to it with a free indicator, and it'll give you the charting system. You can load up to 3 indicators. But it gives you a chance on how to play with it and use it. If you wait until November, for any of you who don't know about TradingView, on Black Friday after Thanksgiving, they usually give a 40 or 60% discount depending on what level of you want. So that's usually when I do it. And I think if you wait long enough, they'll offer like a 50 or 50% discount for a year subscription. I think a year cost me like $175 for the year. It's like, I think it's like less than $20 a month. That's for the Pro Plus version. Unless you're a programmer, you really don't need the platinum or anything like that. Like I said, you can get this platform. Now you can use it for free. And some brokers actually, like if you have a Wanda, for example, they actually use TradingView. TradeStation uses TradingView. I can trade my TradeStation account on TradingView, although they don't do Forex. It just costs of doing business having some of the right tools. Here we had a nice little 1 minute close below this trend line. Let's see if it closed on the 5 minute. The 5 minute is still your safer. I like the 1 minute because I like seeing the price action. I can draw it out a little bit better. But your 5 minute is still a little bit safer bet for not getting whipsawed. Now we did get the 5 minute close below the trend line, so that's a good sign. Again, we're just looking for, here's our target. There's a nice little drop. It's spacing right in here. This red candle came all the way down. No, there's hardly any wick at all. It came right down. Now it's just done a little bit of a retrace. Good chance it came back up, retesting the wedge. So I'm already in this trade. And we're already past our time frame here.
Oh, we're after 9 o'clock.
Yeah, we're after 9 o'clock. So we're gonna have to wrap this up. I don't know if anybody's coming in behind us or not. But anyway, right now we have a little break of the trend line. We're having a retest. So right now I'm looking that this thing could possibly very well continue on down. And where's my, to the target. And my stop could be, I have my stop's way through. I can actually probably move my stop down. I could probably keep it above these wicks over here if I wanted to. That now rather than having a 15 pip stop, I have an 11 pip stop. And I'd actually even feel okay with as long as it doesn't come back up to here. If it comes up here, wicks up and comes back down and tells me that this thing is going to go long up in this area, then I'll probably just take it off. But I'd like to see I'd have to see it close above here before I would take that. Right now, it's still looking like it still wants to go short. And if you're undecided, just close it out, take your profit, wait for it to come back up again, if you're concerned. This one, I was just hanging in here for right now. So with that, we got to get out of here. And again, thanks everybody for coming in. Hope you learned something. Hope you made some money today. And tomorrow is Friday, so we may not have a whole lot to talk about tomorrow, but I will be here. I think Christine and Eva will be here to join me. See you tomorrow. Thanks for being here and stay green.
See you guys tomorrow. Have a great day.
See you tomorrow. God bless.